Hello, friends, and welcome to the Optimized Advisor Podcast, where we focus on optimizing the well-being and best practices of insurance and financial professionals today. On this show, our objective is to help you optimize your life, optimize your profession, and learn from other optimized advisors. I'm your host, Scott Heinela. We hope you enjoy the show. Thank you for coming in today for us to record and have a conversation about a couple very important topics, timely topics.
Very timely.
So this will be two very dramatic ends of the spectrum.
Which is my makeup, is two worlds come together to form me now.
That's actually very true. Your genesis of your professional career was health and wellness and kinesiology, fitness, all those things, which we will discuss today a little bit.
It still is a passion. It's still something that's near and dear to both our hearts. Mine just through schooling a little more, but I would argue you're just as much enthusiast as I.
I appreciate that. I think that's giving me too much credit. Although I do know I just like being physically active and know that that's better than the alternative.
Yeah.
So without getting into further detail, I lean into individuals like yourself and many other professionals where we get this kind of knowledge and information that I can run with. By the way, thank you for the weekly programming. Let's set that aside for a moment. Let's talk a little bit of business. The other end of the spectrum and conversation we're going to dive in today is where we're at in our professional world. There's been a lot going on from an industry perspective. And what is the industry that we represent? Annuities, life, long-term care, risk management solutions. So you and I were going to talk a little bit about today. I'm going to ask you some questions about what you're seeing in conversations that you're having mostly with our advisors, financial advisors and wealth managers, but more and more, and not that it's taking over the bulk of your conversations, but more and more you're finding yourself brought in to the client conversation alongside the advisor in the given expertise, and capacities that we do have. So it's no secret that annuities have had an incredible run since 2023. They seem to be continuing on that path we've talked about for multiple reasons. The easiest one is interest rate environment. An incredible increase in interest rates in a very short while that are still holding, albeit waning slightly from a historical perspective. All systems go.
Yeah, I was going to say, it's still funny to me being in the industry now going on 9 years to say rates are waning and we're still looking at above 5% rates on 3 and 5 year fixed products.
Which brings me to that story you always like to tell when you first started. I say, you tell it better than I do. But this just gives some perspective on interest rates and annuities as a whole, but also the interest rate landscape. So go ahead and tell the story.
Yeah, so the story I think we probably even told on this podcast before is when I first started working for Scott. Remember, I'm coming from the kinesiology fitness world, and I'm coming into this new world of financial services, trying to figure out what I'm doing. That rates were at all-time lows, right? Our 10-year treasury was down around 1. We were at the bottom. And rates in the annuity world were not attractive, to say the least. But I'm coming into an industry, Scott's getting me excited, and as we had a little blip in the 10-year that came up a little bit, we had a 5-year guaranteed MYGA rate at 3% fixed interest for 5 years. Scott said, "This is hot off the press. It's the best rate we've seen. Get on the phone and call every single person that we have a 3% guaranteed fixed interest rate." And that held true for many years. As I was coming in the industry, that was about what we had until the last few years where it's now attractive. I didn't know any different. I thought 3% was great, but
yeah, on the high end, for many years, a maximum 5-year rate, I would say, oscillated somewhere between 2.75 and maybe 3.3 for well over a decade. So that's prime example of, even though we're off of the highs of the 10-year treasury, I think floating around 360, 370, somewhere in that range as of today, or let's call it last week. Interest rates are still considerably high, and the environment is very, very pleasing to those looking for strong guarantees, long-term growth, safety, accumulation. So with that said, with a lot of the conversations that you're having with advisors or their clients, what are you seeing using the annuity, wearing the annuity hat for a moment? What are you seeing as like the most prevalent and common conversations, demand that you're seeing in these products today?
So as we just addressed, we're still seeing fixed rate sales, and the guaranteed fixed rate as CD alternative, treasury alternative, we are seeing those sales still, albeit less than maybe a year ago, but we are still seeing them at, incredible numbers.
Let me expand on that for a minute. I'm going to be a little bit more direct than you probably would. You mentioned the word guarantee. We fully lean in and support guarantees, guarantees, and guarantees. We have always been a proponent and advocate of vanilla ice cream as it relates to index annuities. So fixed rates, strong fixed rates, very, very rate sensitive, focusing mostly on the S&P 500. Why? Because it's the easiest to explain. It's the simplest for the consumers to understand. And not that we don't use it, but certainly less accepting of these volatility controlled indices that in many cases illustrated very, very well, did not produce results in the real world. And for that reason, we turned out to be correct. In most cases, not all, but in most cases, our output, our viewpoint on these products has remained to be the right strategy, which is S&P 500 with a cap or a participation rate. And today, the best that we've seen in so many years includes what?
Guaranteed renewal rates.
How does that work?
Yeah, for me, it's new, and it's amazing because it's an insurance company guaranteed that they can't mess around with rates. So they have a stated set cap rate or participation rate or fixed rate within an indexed annuity chassis, guaranteed for the duration of the product. Lo and behold, if we know a cap rate on the S&P 500 is 10 on a 5-year duration, we're going to average over 6% annualized yield on that product. Tax-deferred growth, no risk, principal protection, no fee. It makes sense when we're looking for more upside potential versus just a straight fixed product, transitioning into a short duration fixed indexed annuity, right? The guarantee word, that G word that you were just throwing out, is so important when we're looking at these products because that's the lens at which we should be looking at indexed annuities. They're not securities, they're not investments. Everybody says, well, an indexed annuity is riskier than a fixed rate product. It's not inherently any more risky. It has a 0% floor. You can't lose money. You can only go up. So I don't like...
You can't lose money due to market losses.
Due to market losses, correct.
If you were to prematurely surrender the contract, or if the company were to, God forbid, go out of business and things like that, then certainly I would think it's a fair statement to say you could lose money, but not to market performance.
Correct. And I would think I would say too many advisors look at index annuities in the wrong way. They don't look at it as an alternative asset class within a portfolio that has its purpose as a safe instrument, right? The guaranteed instrument that we're talking about. That's how we view index annuities within a portfolio. And a 5 and 7 year chassis product is the right blend, sweet spot for those products to give yield, but also have short duration, and it doesn't need all this bells and whistles that a lot of our competitors sell.
They really don't. Not when you have ultra competitive rates, double-digit cap rates, guaranteed cap rates. I mean, the performance speaks for itself.
Exactly right. And then transitioning, what else? You're saying, what are we seeing? Well, we have safe growth, with fixed rates and short duration index annuities. Mm-hmm. The other one is income. Income is still extremely hot currently within our industry because of how rates have come up, making today's products much more attractive than products that were sold 4, 5, 6 plus years ago. That replacement opportunity is on in-force income rider contracts. Variable annuities with income riders are pretty much in all scenarios. And I say pretty much in all because we've done so many reviews on variable annuity books, and we're just checking them off one by one that we can guarantee someone more income than they currently have on their in-force contract, even if they've already been taking income from that contract.
That's incredible. At the end of the day, when we're selling guaranteed income, we have always been strong advocates of let's not sell more of this to the client than they need. What does that mean? What that means is it's on the responsibility of the advisor to do a proper due diligence to say, what is it that you really need from a guaranteed income standpoint to meet your most essential needs? And then it becomes the secondary conversation of beyond that. Okay, well, is there any additional income that you'd like to cover on a guaranteed basis for, what would be examples of that? Those examples would be just disposable expenditures that I would have in a given year, but not the essential expenses that I have. And so we walk the advisor through this process of really, really quantifying what is it that you need from a guaranteed standpoint. Let's not buy any more of that than we really need. And now what you're saying is that the advisor and the client can be even more efficient with those dollars to either allocate less to generate the same amount of income, or with the same amount of resources that are in the contract, actually generate more income.
Exactly. Give them a pay increase by not doing anything other than replacing their current contract. They're not doing anything different. In a lot of scenarios, they're reducing fees if we're coming from a variable, providing more guaranteed income, and all it takes is paperwork.
And we've had some cases where we will have an existing annuity receiving income. So they've been taking guaranteed lifetime income distributions. And in some cases, I believe we've been able to increase on a guaranteed basis that client's income by 20 to 30%.
Oh, more. I've seen 55%.
Oh my God.
Yeah. And like I said, we've done a spreadsheet for multiple advisors where they just sent me their entire variable book of business and said, here's the income on all these accounts. Can you beat it? And we went down one by one, and then we quantified what the percentage more of income was, the reduction in fee, what it was, and spreadsheeted that for the advisor. And yeah,
you talk about the fiduciary responsibility, right? The goal. What's the goal of guaranteed income? The goal is to give you as much income as I possibly can on a guaranteed basis when you need it. Now, my responsibility of the advisor, and this is where you come into play, Nick, and us at Optimized Insurance Planning, is to do the due diligence from an industry carrier, a broad perspective, to say we're not just shopping one company, we're shopping the gamut of the portfolio of products that we have at our disposal, and we're giving you the optimal solution. That, by definition, is what we all should be doing as a fiduciary to our clients.
Exactly. And I think most advisors, maybe not most, a lot of advisors get stuck in the easy route. What they have one carrier, they have one process that they're used to following.
It's what I'm familiar with.
Mm-hmm. I'm used to this process, so I'm going to do that. Even if it's not what's in the best interest of the client, they might not even know as an advisor that it's not in the best interest.
I think that's most of the time the case.
Right? It's just easy.
They know that the income is competitive, but what they don't always know or have the resources to determine is the optimal solution.
Exactly. And I think a huge value add for a firm like ours is that, right? Not just spreadsheeting. We've talked about it a little bit over all three of these product lines that we just talked about. It's looking at a plan for these products, not just giving them a product, right? Mm-hmm. Where does the product fit? Filling the gap with the solution that's needed. And while doing that, shopping it amongst 30 plus carriers to ensure it is the optimal solution.
Yeah. We've always been a company that's been so rate sensitive on both elements or both sides of that coin. One is which product solutions are providing the highest potential yield. So who's got the highest interest rate? Who's got the highest cap rates? The other big element, what we touched on, is historically speaking, who has the best renewal rate history? Because I don't want to just buy the product today that has the best rate, and then 2, 3, 4, 5 years from now, it's going to be highly punitive. Other reason why we sell guarantee cap rates today, it completely eliminates the renewal rate risk as it relates to the duration of that contract, 5, 7. Usually it's a 5 or a 7 year guarantee. But on the other side of that coin, the sensitivity to, or lack of loyalty, if you want to call it that, to the fact that we're completely product agnostic, and it's which product is providing the highest guaranteed income to the consumer for when they need that income. That's our responsibility.
Yeah, and what we like to provide our advisors too is the comparison to show them that, right? Not just send one illustration, but send the comparison to say, here's all the products that are available to you, even ones we might not represent as a firm. We have access in the calculator to show we are putting the best product in front of you. And if we are not, and there's a better one out there, well, here it is. If you want to go elsewhere, you have the option.
And, it's not just, in many cases, it's more than just income. So this is where your value comes into play as well, as comparing and contrasting the 2 or 3 products that kind of rise to the top in any given scenario, because some companies do provide enhancements for medical impairment. Some products may provide more liquidity. The underlying contract on one contract or one annuity might be more competitive than another. So these are all the subsets and the detail that you really need to get into, where you, as well as the other planning directors we have, that really, really provide that value and go the extra mile. Okay.
And you, before there, you can go even granular. Is the company good at processing business? Is it going to be easy for that client and advisor to purchase that contract? When that contract's in force, how easy is it going to be to get that paycheck? How easy is it going to be to get that 1099 when you get the income? So it's those type of things on top of, yes, all the other things that you listed that we're able to lay out and compare and contrast each company, each product.
That's a good point. The intangibles are also a very important element of the conversation of not just getting the contract issued, but how are they going to administer the policy post-issue. Okay, moving on from that, let's touch a little bit on life insurance and what you're seeing in that world.
Annuity hat off.
Life insurance. Yeah, we're switching
insurance
channels.
hat on.
Yeah,
okay,
yeah.
Perfect. Yeah. The biggest thing we're seeing opportunities, once again, is replacements. A lot of old in-force life insurance contracts getting repurposed.
Are these cash value policies, term policies? What are you seeing?
Cash value plans.
Okay.
Primarily whole life.
Okay.
And you got to think why. So where boomers are in their age maturity, many of them purchased older life insurance contracts in their peak earning years, in their 40s, 50s. And now they're in their 60s and 70s. Maybe their kids are now successful, no longer needing the life insurance. The boomer no longer needs it for cash value. So what can we do with this life insurance plan? And so we're getting a lot of opportunities coming our way with these statements of saying, Nick, can we repurpose these policies into a new solution? One being long-term care. Can I 1035 exchange this into a long-term care solution to now ensure that I'm protected against that risk? Yes, we can do that. Here's our options. The other one, I don't want to pay premiums on my life insurance anymore. Can I just 1035 exchange, a tax-free exchange, over into a new policy with no premiums, a paid-up policy that has a guaranteed death benefit? Yes, we can do that.
On a guaranteed side, what are you typically building out in a guaranteed death benefit? To what age?
Yeah, it depends obviously on health of client, age of current client, and goals, but I like 105. It gets me past that 100 mark. It's not all the way to 120, which I think is overkill. And there is an inherent cost for extending 105 to 110, 110 to 120. So 105 is
a
good,
sweet spot. Yeah.
Is a sweet spot. At a very minimum, it's 95.
Okay. Do you have any examples of a case that you've worked on recently where you can give the audience a specific dollar amount? So existing death benefit was this cash value, and you were able to by why?
Yep. So we had 2 VUL policies in the state of California. I say that because it's more restrictive than other states, so we'd have even more options, but this is still a great solution. So it was single owner, single insured husband on 2 VUL policies. Cash value combined was in the ballpark of $330,000. We had a $450,000 death benefit. So the delta between the two was very small.
Yeah.
So they didn't have much life insurance. They just had a cash value plan, basically. And they didn't need the cash value. They had plenty of assets, plenty of retirement income, plenty of real estate. So their biggest gap was the long-term care need. So what we did is we analyzed all the options we could, and they wanted to cover the spouse as well. So we have the husband who owned the policies. And as you know, what's our restriction there on a 1035 exchange?
Like to like.
Like to like. Same owner, same
wife's out.
Wife's out. She can't come on. But with a long-term care annuity solution, which we went into, a fixed annuity solution, you can add on the spouse as a joint eligible person, and we got 4.5 times leveraging. So that $350,000, approximately rounding up, cash value turned into well over $900,000 of long-term care for both of them to access on a tax-free basis.
Wow.
Fixed annuity earning a
Fully
fixed
paid
interest, fully paid up,
Fully guaranteed benefit.
Correct. So that's what I'm saying when we're looking at in-force contracts and being able to repurpose those funds for a new solution. Now, it's still a fixed annuity earning a fixed interest rate with the death benefit. So it's not like they paid a premium that they're never going to get back. It's either coming back to them in that $900,000 long-term care benefit, or it's going to be a death benefit as the account value to the kids.
And generally speaking, when I do that, could the annuity value still grow?
Yes.
What's the current interest rate, roughly speaking?
Yeah.
Not exact rate, but what's the underlying interest rate on these contracts that we're
The
seeing?
net interest rate, and I say net because there's a long-term care cost for that
Paying
leveraging.
for long-term care insurance
Correct.
inside the annuity value.
And all that does is reduce internally what that interest rate being applied is. So it might be a 5% fixed interest rate with a 3% net cost. So the client is netting out 2.
Got it.
Typically, we're seeing closer to 3 in today's rates.
Okay.
So we're going to see approximately a 3% fixed net interest rate being applied to the account. So you are getting
seeing
good
some
growth.
honest growth.
Hey, 7 years ago, that was the best rate going, and you had me calling everybody for it.
Everybody.
So now I'm getting 3 to 5x long-term care and that same good fixed interest rate.
Beautiful. And remember, if the benefits are used to pay for long-term care, the benefits are
Fully tax-free,
That's
thanks
right.
to the PPA, Pension Protection Act.
What about, does anything come to mind in terms of value, specific values, or an example where you took the annuity or the life insurance value and just transfer that into a fully guaranteed death benefit?
Yep, actually have one on my desk right now. So we have one where it's a big policy with an outstanding loan even on it. So we got a $500,000 cash value with a $200,000 outstanding loan on an enforced IUL policy. Client essentially used it to pay for their college, as you should with an IUL. Kids are long gone. Now they just have this cash value life plan with an outstanding loan. So what do you do?
Did they ever use it for college or anything like that? It just...
No, that's what they did.
They
They
did.
took the loan out, paid for college as they should, and now they have this outstanding loan on their cash value plan.
Got it. So
The recommendation was use the internal cash value of their current plan to pay off their existing loan or their debt that's owed. Because remember, they have $500,000 of cash value.
Right.
So just use it, pay it off, which they did. Then we had a net cash value to use. Well, the client didn't need this little bit of life insurance of their in-force. They just wanted it paid up and a guarantee to 105. So we just 1035'd it over after they paid off the loan and bought a tax-free death benefit fully guaranteed to age 105.
How much?
I don't remember the exact number, but it was significant enough that it was 2 to 3 times what they currently had in force.
Oh, right.
So it was at least $700,000-800,000.
Yeah, and fully paid up, fully guaranteed. That's great.
Yep.
Good. Okay.
Yeah. So it's those type of solutions that on that we're seeing more often than not on the life insurance side, right? It's repurposing of old life insurance strategies.
Yeah. Okay. Can we now switch channels abruptly?
Hat off now. Number 3.
Annuity hat was on, it's gone.
Okay.
Life insurance hat was on, it's gone. Little bit of long-term care insurance hat, it's gone.
Okay.
We're now going to health and wellness and fitness.
Oh, this is face, I'm two-faced. So we got annuity, life, LTC, and then here we go.
That's right. We would be remiss if we didn't take this opportunity to talk a little bit about just health and wellness and fitness. Here we are, rounding, I would say, third base in terms of the calendar year, making our way into the holidays, where typically people will tend to slow down. Maybe they aren't as excited about summer's over, right? I'm not out on the boat and at the beach and doing all these things. I'm less concerned about my body.
It gets colder. You bundle up.
Yes, I'm drinking bourbon. I'm eating chili. I'm, the warm comfort foods. I'm slowing down a little bit. I start to put on my winter coat. What say you about what it is that I can do to stay, little tidbits, little best practices to try and combat that?
Yeah, it's definitely a challenge.
Not to eliminate it. That's not my suggestion. It's finding some happy medium of how to weather through the holidays without me getting to the other side and saying, holy shoot, that shouldn't have happened.
Yeah. Most of that stems from food, I feel, with most of my clients back when we were dealing with it's food related, right? When we come around holidays, we have some major food issues going on that cause more issues than just staying active. The biggest thing that I find is the activity needs to stay up even though it's getting colder, right? If you live in a place that it becomes colder, staying in activity mode is challenging. So having activities that allow you to stay indoors and to be able to get your heart rate up quicker than slow pace, slow lifting type exercises is very important, right? If I can jump rope, if I can ride a bike, if I can be on a treadmill, if I can do the rower, if I can do these type of activities to get my core temperature up quicker so that I'm ready to sustain my workout because I'm cold, I find to be successful for most people because they get that cadence going.
That stimulus.
I warm real quick and now I'm ready to dive into my workout.
Elevate my heart, get a sweat going, get the blood pumping. That would be a good best practice.
Yeah, do 100 burpees a day. No problem. You'll be good.
Easy for
warm up.
But it's get on the bike, right? Indoor bike, or the indoor treadmill, get on a rower.
Correct. 10 minutes.
Do a bunch of lunges.
Correct. Anything that's going to be high repetition for about 10 minutes, right? That's going to allow your heart rate and your core temperature to increase rapidly to get you ready to work out.
And then get into the routine, whatever it is that day.
Correct. Because if you go right into a slow pace lifting routine, especially if you're working out in the morning and it's cold, it's going to take you the entire duration of that workout to be ready to actually work out. And so getting moving quicker, faster will help increase the intensity.
Okay. You've been developing weekly programming. And for you, your weekly programming consists of typically 6 days of activity, of a workout, with 1 day of rest.
Correct.
Okay. Not everybody, the point here is not that everybody starts with that. We have agreed that the starting point for everyone is to do something for a sustained period of time. Let's call it at least 20 minutes.
Yep.
For at least 4 times a week. More days
than you rest.
That's right. So that's the number one goal. And so 4 days a week, sustained period of time. If you could do 10, 20, 30, and consistently.
Correct. Consistency is the number one thing. And what I want to get across is those 6 days that are laid out that I'm doing, they're not all 6, hour-long kick your butt workouts, right? They are systematically programmed to allow me, maybe one of those days is a long cardio, right? An aerobic type activity. Maybe one is a short duration, just lifting type, right? Resistance training. and the other 3 are going to be some type of hit, right? Either CrossFit or F45 or Orange Theory or your own version of that. And so it's the consistency that's the most important. If you're not doing anything, just doing 4 days of walking is better than nothing. Doing 10 push-ups incorporated with walking is better than nothing. So that consistency component of doing it 4 days, more than you're resting, for 6 to 8 weeks is a huge, it's a huge step in the right direction of making it consistent. Back to your previous question of how do you sustain it through holiday and winter? It's already part of your routine where it's a non-negotiable, that you've done it for long enough that you can't turn it off because it's the holiday.
Start today, people. Okay. The next thing is I want to double click on your programming. For you at 6 days, you've already gave some insights as to I would say the 10,000 foot overview of that programming, but let's double click on a few things. So when you think about different body parts, when you're programming, what are you really thinking about in how much volume, how much stress per body part?
Yep. So when I lay out a week, right, a week of programming, I start with stimulus based. Okay, what is the stimulus and aerobic capacity that I want to train in? Do I want it to be short, explosive? Do I want it to be long, slow aerobic? Do I want it to be, balls to the wall as fast as I can, or somewhere in between? So I start with that as I lay out my training. Then I go with stimulus, meaning, am I opening my hip and doing an explosive movement? Am I doing something slow and heavy, right? So take, for instance, a deadlift. We're going to do something slow and heavy on a body part, right? I know it's opening of the hip, so that I don't want to do that same movement on every single movement, right?
It's also heavy lifting.
Correct.
So it's programmed to be a heavy day to get that form of stimulus in your body, get your nervous system building those muscles, but you don't do that every day.
Exactly right. And nor am I going to do a long, slow cardio day. And when I say long, slow, okay, a 10K run, a 20-minute bike, a 30-minute row, whatever that long, slow cardio is for you, that you enjoy. I don't enjoy long distance running.
Right.
It's not fun to me. I can do it, but I don't want to do it. I'd rather go sit on a rower for 30 minutes than go run outside for 30 minutes.
I don't want to, and I can't.
Exactly.
But I will run.
But I will.
Yeah.
Exactly. So it goes the same, right? You're going to have a long, slow cardio. You're going to have one lifting type day, and everything in between is going to be some form of a 15 to 25-ish minute high intense workout, where it's going to be interval-based training. It's going to be, multi-joint dynamic movements that are athletic based, no machines, no single joint movements. We're doing multi-joint movements that are dynamic.
High intensity, constantly varied for the most part.
Exactly right. No.
Now, what about accessory work? So if that's component one, so I spend 10, 15 minutes of warming up, just moving my body, getting some stimulus going, warming up my core. Then I get into what you just described, whatever that the core of the workout is going to be that day. But then what are some suggestions or insights you can provide on what accessory work should I do that day to just culminate the overall workout?
Exactly. So double click on that. Everybody needs to be doing what you just said. You need a warm up of some capacity. Just move for 10 to 15 minutes prior to whatever your actual workout is going to be.
See, I know something.
Move, something. We've taught you, Roy. 10 to 15 minutes, and then your workout, and then you're going to have a cool down at the end of the workout. Now, this entire workout, mind you, is an hour long, right?
Is that plenty?
That is plenty. It could even be shorter, depending on the activity, right? There's certain workouts that are 5 to 10 minutes that you're not doing anything after that.
Right.
With a 15 to 20 minute warm up. Exactly. We don't mess with those too often. But so yes. And then after that cool down, depending on what the stimulus of the workout was, adding accessory work is very conducive to overall fitness. That accessory work can be stretching, right? It could be rolling out on a foam roller or a lacrosse ball. It could be doing accessory like lifting type, single joint, single lifts, right?
Spend 5-10 minutes doing abs, doing bicep curls,
all of that.
whatever it is.
Whatever it is.
Tricep extension.
Correct.
Whatever body part you want to work.
Exactly.
Okay.
You know, many women want to work on their legs. Many men want to work on their upper body. This was a perfect example of, so my wife likes going to F45 and CrossFit. She does those two things. So I've gone with her to some F45 classes, and it's funny. They'll have the room divided in half and say, okay, on this day, you have the option. You can do legs or you can do upper body. It'll be all women on legs, all men on upper body. So it's crazy how the mindset is, right? What they don't want to get big and bulky, so they're not going to work their arms. Guys don't really care about their legs. They want to have a big chest and big biceps.
Right.
So, but you know, when you're working on accessory work, it's all about hitting movements or body parts that you did not tackle within your workout. So if I focused on deadlifts, as we talked about, I don't want to be doing anything that's working my back, right? Maybe not anything working on my core even, because it's probably already taxed from the workout that I did. So we want to work on other things that might be complementary, like lunges or squats, right? In the same realm, but outside as accessory work.
Got it. Okay. Last but not least, directly pre-nutrition and post-nutrition. What should I be aware of and implementing in my nutritional protocol to maximize my results when I'm in a routine?
Yeah, honestly, I went through this nutrition course after college, and it was Nutrition 2.0, and it was a certification-based course. And they did a study on all pre-workout nutrition, what you should do, what is the best stimulants, right? And all the I don't want to say all, most products on the market are junk. They're littered with caffeines and sugars, and they're just not great.
I would throw those into this ultra processed,
Exactly.
fad kind of thing. So let's throw all those out. Is it fair to do that, or pretty much all of them?
Pretty much all of those.
What I'm referring to is more, because I would think most people get in a routine. What time of the day are they working out? Certainly busy advisors. It's like the only time that I can squeeze into my schedule to regularly work out is when?
5 a.m., 6 a.m.
Exactly. And I've fasted. So is it best for me to go with water or a cup of coffee directly into one of these workouts and not have any nutrition in my system prior to that?
I say yes.
You do.
Continuing to fast and working out fasted. And what I mean by that is your last meal was dinner, probably at 6 or 7 p.m. for most people. I'm way earlier. I'm at 5 usually. I'll fast all the way through workout, and then my first meal is going to be post-workout. And yes, a cup of coffee is actually what I was getting at with that. Is the best pre-workout is just straight black coffee.
Or for me, what I'll do, because sometimes it's hard, if I'm going straight into a workout and it's a hard workout, I'll get a little nauseous if I don't have some food. So what I'll do is either 100% pure applesauce or just eat an apple or something minimal like that. That's, I would say, easier digested, but it gives me some substance in my system without overloading my gut.
Correct.
Getting that food in my gut that is like, oh, I feel like crap.
Yeah, I mentioned this on the podcast on one of our older nutrition episodes, but when you think of things that can be digested quickly, that's ideal. So applesauce is a great example. The way you want to think of it is if you were to put that food that you're about to consume in a gallon of water and you were to shake it up, what would happen? Would it still be sitting there, or would it dissolve into the water? You want to
metabolize quicker.
Correct. You want that thing that right when you shake it up, it's dissolved. So like applesauce, think of that. It's going to dissolve instantly. Put a banana in there. It's going to dissolve pretty quickly. And apple's going to sit in there a lot longer because of that core, right? So that wouldn't be something I'd recommend.
More pureed, something like
pureed
sauce
shakes
or a banana. Yeah,
correct.
Got it. Okay,
Things
now
like
post workout.
Post workout,
What do I want to do? I've just worked my ass off.
Well, within 30 minutes, you need a shake.
Within 30 minutes.
Within 30 minutes, because you need to replenish your glycogen
And what should
stores.
be in that thing? What should be in that bad boy?
Protein, whey protein, preferably, or egg white protein.
Okay.
Yep. And now you can have
Purer the better.
purer the better, of course.
Read the ingredients.
Grass
You don't want all these
correct.
gums and all this other stuff in there. Find a pure, lesser the better in terms of ingredients.
Exactly. That, and why I say egg whites, because there are powdered egg white protein powders.
For heaven's sakes, people, make an investment in
Exactly.
quality protein. You owe yourself at least that.
Yeah, the stuff you're finding at Kroger or Ralph's is not going to be
good.
your best. That's for sure.
Okay.
There's high quality stuff out there on the market that is not that expensive as compared to these bulk produced stuff. But doing that within 30 minutes, very important to replenish instantly, especially if you're still fasted. If you haven't had any food, only coffee, you're gonna be depleted after that workout, needing some.
Okay.
Now,
Go ahead.
yeah, now that's post-workout. When you're still at the gym, for the most part, you're having that shake, if not in your car on your way home. When you get home, after you clean up, you're ready to go into the office, now you should have a meal. And it should be a whole meal, like eggs, right, with some meat or something like that. That is the time you have it. After you've cooled down from your workout, you've already had your shake to replenish your glycogen store sugars, right? Got your protein in to help your body rebuild. Then have your full meal once you've gotten home, gotten cleaned up and ready to go.
Because if I'm doing a down and dirty protein shake, which I want to ask you, L-glutamine and creatine, should I be adding those in? Don't answer yet. But if I just do a whey protein, add in some water, I might be 150 calories.
Yeah, depending. Yeah, it's not a lot. Yeah. No, and it's not these mass bulk. Yeah, it's not a meal replacement shake that's giving you 1,200 calories.
That's more or less what I was getting to.
Correct. No, we're trying to get 30 to 50 grams of protein back into our body with some sugar, which most of those are going to have instantly, to help our body give the rebuilding blocks after we just broke it down.
Okay, L-glutamine, creatine.
Yes.
Okay.
Yes. And creatine, everybody should take it. It has this
men and women.
It has this connotation that it's only for big meatheads or athletes, and the reality is your body naturally has creatine, right? It's a building energy source for your body, so it needs to be consumed, because a lot of us aren't getting it through diet any longer.
Right. There's more and more studies coming out where it's that. More and more studies reinforcing how important it is for women.
Correct. And when it comes to it, it doesn't have to be overly fancy. 100% creatine is all you need. And just take the normal dosage. You don't need
scoop. Just put a
little scoop, little drop. Gummies. They have a million ways to deliver creatine post-workout in your shake, even with your protein shake. That's what I do. I have a scoop of creatine. I have L-glutamine. I have my protein, shake it up with a little bit of heavy whipping cream and water. There's my shake post-workout.
Excellent. Thank you so much for your time today.
Always
This was insightful. Action-packed.
Action-packed. We put on both faces.
We did.
3 hats.
Risk management.
We did it.
Insurance planning. We're solving all the problems of the world. Well, then we flipped to the other side of the coin, health and wellness, and all good things.
All good things. That's what we strive to optimize people's lives.
Amen to that. Thank you for tuning in. Till next time. Cheers. Thank you for tuning in to today's episode. Please subscribe, like, share, leave a comment or review. Be sure to check us out on social media at Optimized Advisor Podcast. Till next time.